Okay, I would like to call to order a meeting of the Broome County Land Bank Finance Committee. First item of business is approval of minutes. Assuming everybody has read them, are there any corrections, additions, or subtractions? If so, I'll entertain a motion to accept them. Kyle, thank you.
Second.
Okay, thank you, Harry. And all in favor? Okay, new business. Review of the 2024 audit.
Okay.
Jess.
Yes.
You're
Thank
on.
you, Mike. So the finance committee is where every March we host our auditing firm. This year and the year prior, Strasher and Malecki. So they're going to just present our financial statements. Just one item of note. Rob and I made just a few suggestions to Drescher as it relates to the narrative of the report. Some items of the narrative that we just want adjusted, but from a figure standpoint, Rob and I worked very closely with Mondorf and Fenwick to come up with the reports that Drescher had requested. I think we responded within a fairly decent amount of time. So I know that Drescher is going to consider those adjustments, and I'll just hand it over to them. That's all I really have to say right now.
All right, thank you. Can you guys hear me?
Yes. Good.
All right, perfect. Well, thanks, Jess, and hi to everyone on the committee. I'm Charles Trotzi. I'm the director on the engagement. With me is Nick Petronic. He was the manager on the engagement. And as Jess mentioned, these financial statements are in draft form. They have been prepared by Nick, and then they go through a quality control process where they get reviewed by me as the director on the engagement, and they get reviewed by a concurring partner who has not seen or is engaged in this engagement at all. So basically, the concurring review is what's left. Part of my changes included some of your changes, Jess. So it all kind of filter in, and ultimately they are your financial statements. So they're your footnotes. Everything belongs to you except the opinions that are on our letterhead that only make up about 6 or 7 pages. So yeah, let's get to it. I know we sent the presentation recently. I can share it on the screen, or if everyone has it in front of them, I don't have to do that. What's the preference?
Everybody does have it in front of them, Charles.
Okay. Okay. So, well, actually, so I don't just keep seeing faces, maybe I'll just do it. All right. Okay, you guys see the full screen?
Yes.
Okay, so this will serve as our communication here. I'm happy to answer any questions on the financial statements afterwards if you'd like, but the highlights of the financials are in this presentation. So what we offer, the products of our audit as part of our engagement is the basic financial statement themselves. As I said, they are all the numbers, the notes are the wording of Broome County Land Bank. We do have a format, so we help you compile it. We're able to do that and stay independent because we believe that your group has the capabilities, knowledge, skills, and expertise to compile it themselves if they have the time or the resources to do it. But we do offer it as a more efficient manner to get these issued. Again, there's 3 opinions that are on our letterhead this year. That's 1 more than last year because we incorporated a single audit this year, and I'll talk about that. So the very first opinion on the financial statement is on the numbers themselves. That opinion is at the front of the financial statements, and it's essentially us doing our audit test and letting the reader of the financial statements know that these financial statements are free of material misstatement and that they can be relied upon by the users. So the opinion, again, this year is an unmodified opinion. It's a clean opinion. It's the best that you can get. And then the second and third opinions are on the back of the financial statements. They'll be on our letterhead again. The second is on government auditing standards. So as part of the component unit of the county, you receive this government auditing standards opinion that makes us as auditors review your internal controls as they relate to the output that go in your financial statement. So we review your policies, your procedures. We make sure that you abide by them, and all the processes that go from getting a bill to recording the transaction to putting it in the financial statements all has the necessary controls in place. So based on that opinion, we didn't find any material weaknesses or significant deficiencies in your financial statements to report on. So again, a clean opinion on your internal controls. The very last opinion this year is a new one. It's an opinion on what's called the uniform guidance. The uniform guidance is what oversees federal spending. So any entity that receives over $750,000 in federal awards is subject to that single audit. So this year, you did meet that threshold with being a recipient of ARPA funds from both the county and the city. And so because you expended over $750,000, not just ARPA, but you also received CDBG funds that qualify there. We were entitled to test one of those two programs. And the program that was earmarked of being more of higher risk was the ARPA. So we tested all your ARPA funds this year. Not all of them, but we tested the majority of your ARPA spending in accordance with the compliance requirements set forth by the Office of Management and Budget at the federal level. So part of that audit is really more testing based on compliance and less on the reasonability of the numbers. So what we do is we test a sample of transactions using federal funding, and we make sure that the transactions occurred and were compliant with the allowable cost, allowable principles, cash management, reporting, all the different compliance requirements that are set forth at the federal level. So basically put a federal agent hat on, and we're federal auditors at that point. And based on our single audit of the ARPA funds, we didn't find any what we call question cost or deficiency. So all your spending that we tested as part of your federal spending was in line with the compliance requirements set forth. So 3 clean opinions. That's what you look for. That's what you look forward to, and that's what you're getting for the year ended December 31st, 2024. The auditor's communication we'll talk about in the next slide, but that's really the letter that communicates the required communication that we have to have as auditors with your group overseeing the audit. So what our responsibility is under generally accepted auditing standards is really to provide that opinion that can be relied upon by the by the readers as a third-party auditor. In order to get to that opinion, we use what's called reasonable assurance versus absolute assurance. Essentially what that says is when we design our test, we look at your controls, we identify what's areas more of risk than others, and then we select our samples based on our assessed risk. So we can't test the entire population of an entity. It would be not too challenging, but it would take way too much time, and we'd have to charge way too much money. What we're allowed to do under generally accepted auditing standards is to do that reasonable assurance where we test some of the high risk transactions, we test some of the high dollar transaction, and then we do a random sample of other items in the population. And based on our testing, we're able to extrapolate to make sure that that account balance is fairly stated. Another item I like to discuss under what our responsibility is our responsibility is not to find fraud. Not that we don't have procedures that are earmarked that we believe would find fraud in the event that fraud were to be substantial. But it's not our number one responsibility. So we do have tests to find it or to potentially find it, but it's not. It's a common misconception where people believe that your external auditors are your forensic auditors. So that those are two different types of auditors, and I just like to point it out there. Significant accounting policies. This is just a required communication because sometimes the standard setting body will issue some new standards that may impact how your financial statements look. But there is no change this year. So the second bullet, there's no change in the form and content of your financial statements, other than we added an opinion on your single audit or your federal spending. Significant accounting estimates, we have to communicate that because accounting estimates are often more challenging to audit themselves. It's not like we can look at the support of a particular transaction. We have to rely on some of the assumptions that are used by the entity to make sure that those estimates are reasonable. So for Broome County Land Bank, the only significant accounting estimates in your financial statements is your assets that are held for sale. Essentially, they're calculated at the cost of acquisition plus any improvements that were made at cost for those projects. That's probably the best way to account for those. That's the most conservative way as opposed to fair market value or others. So your significant estimate is fair and reasonable. And we compare that to what other land banks are using across the state, which is pretty much the standard. Independence, the only way for our opinion to mean something is for myself, for Nick, anyone involved on the engagement is free of independence or free of bias and independent with your entity. And we are, in fact, an appearance. And then other matters, that would be, we'd have to disclose to your group today if there'd be any other matters that are worth discussing, if we had some disagreements, if our scope was limited, meaning if we requested transaction, we're told no, look at another one instead, we'd have to disclose that. We received full scope audit. Even though we did the audit remote, we have access to bill.com where we can see every transaction that goes in there. So it was a pleasure to work with the staff. And yeah, we received full scope, and yes, Jess, things were provided very timely. So thank you. So some financial highlights. Your balance sheet is basically broken out into assets, liabilities, and then your net position or the balance there. We'll go through each of them, but on the asset side, you have two components that make up your assets. You have cash of $1.57 million. That includes $500,000 of restricted cash. Basically, we take your unearned revenues, $502,762, and we restrict that cash because it's for a purpose in the future. So we receive cash in advance. We haven't performed the services yet, so that cash needs to be restricted. So you have cash on hand of almost $6 million, and then you have your assets held for sale, which sits at $1.8 million. That's almost $1 million increase from the prior year. Your cash did go up $255,000 as well from the prior year. A lot of it is all the new grants that came into play. So a strong increase in assets during the year. Your liabilities, unearned revenues, again, $500,000. That's a decrease of $350,000 from the prior year. Essentially, over the last few years, you've received those ARPA funds and other CDBG type funds. Those funds were set aside until they were used. And as you've been using them this year, obviously with a lot of properties being sold and a lot of activities taking place, we expected your unearned revenues to go down. And it's going to continue to go down in 2025. And then your accounts payable, more timely in paying bills, that decreased $50,000 from the prior year. So your main sources of revenues on the next slide, your financial statement showed two types of revenues, one being property sales, another one being grant income. In 2023, you had $218,000 in property sales, where you sold 7 properties. In 2024, you sold 15 properties, so we expected it to about double, and that's what we're seeing from $218,000 to $430,000. The green portion, the bulk, represents your grant income. So $760,000 this year was the Land Bank Initiative Phase 2. $520,000 came from City of Binghamton ARPA funds. $315,000 came from New York State Community Development Block Grants. $600,000 from Broome field remediation. And then you had some other ones from obviously the county ARPA and then Town of Union. So yes, a very strong increase in revenues with your grant income. Again, over the next few years, you'll start tapping into your unearned revenues. That those grant income are going to likely come down a little bit. But again, it just shows that the significant activity that your staff had to go through this year to collect the money, spend the money the right way. Yeah. Your expenses broke.
What's
I'm sorry.
$70 in additional? Where miscellaneous revenue, $70.
Miscellaneous revenue. I
Just
believe,
curious.
yeah, I believe that's a reimbursement from overpay of insurance for a premium.
Okay.
It's something that's typically how we put it in there, but I'm not sure. Charles might be able to answer that question.
What was the question?
Forget it.
Oh.
There was a question about $70 in miscellaneous revenue as part of the report.
Just
Just curious what
figure out
miscellaneous
what
revenue
it
was.
makes sense.
So.
Let's see if I have financial statements here.
I do have a question. We have cash in the bank. Did we get interest on
You catch
that?
me off guard.
Yeah, I
$70.
believe that was just interest income.
It might be
Okay,
your interest on your
interest income.
cash.
Pardon?
Interest income on cash. Exactly what you're just about to ask.
That was Mike's next question is,
Yes.
do we draw interest on our bank account? A small amount, right? It's not in investments, right? It's just in a checking account.
It's just in
essentially.
a savings account,
Savings.
the sale of our properties, essentially putting those sale proceeds into an escrow account. Due to, unforeseen in the future, Tyler didn't happen. So that money's just kind of sitting in its own savings account and accruing interest along the way.
So I know with the agency, we put a bunch of money in, we're getting between 4 and 5% interest on it.
Mhm.
One of the
And
things,
we're talking over the top.
Mhm.
I don't know, do we have the ability to, I don't know, if that's a question to ask and look into is, do we have the ability to do that? Does the land bank have the ability to do investments like that?
Mhm.
There's always the question, Mike, as to whether we need to keep that money liquid. I don't know.
Well,
It's $1 million about, right?
In those
That was,
accounts, it's liquid. You can
That's-
draw it
that-
all
that's
whenever
a-
you want.
That's a recommendation that we kind of talked about. There is no restriction, I think, as a component unit as an authority component unit of the county, you're entitled to using some investments in the form of treasuries, money markets, and other types of investment vehicles. It might be something to look into as you spend down your ARP funds that came in. A lot of them, some are unearned revenues, and a lot of them are really short term, where you get the cash and you pay the bills, or you file your quarterly reports and you get the cash back. So it's hard to manage that type of cash, especially when you have a year that has significant activity that's planned with some of these ARPA funds. But as you look in the future, if you go back to cash levels, it's similar to 2023. 1 million might make sense to start preparing some cash flows and seeing when we're going to need the cash and when we can invest it. $70 obviously is not a lot of money considering the amount of cash, but you're not in a position where these counties and cities are, where they were awarded in 2020 and 2021 significant amount of ARPA funds, and they could just leave it in there for 3 years and earn interest on it. That was allowed to use those funds for. And what a lot of our counties that we audited did is that's the case. They put all their ARPA funds into a bank account. They earned significant interest at a time where market was pretty good. And they didn't actually spend a lot of the money until late 2023, early 2024. And so maybe as you go into the future and you see where cash level stands, it might make sense to start exploring some of those opportunities.
I think from my perspective, thanks for that, Charles. I think from my perspective, I would say if it's funds associated with sale of properties, that sort of thing, that might make sense. I don't know about grant revenue that we're receiving, if it makes sense to do that.
If you don't, you're
No, I
not
agree.
using it, and it's just sitting.
Most of our grants are reimbursement based, so we have to spend the money first.
Right, okay.
And then we request it,
Mhm.
and then it kind of it offsets from there.
I'd say we should look into it.
Mhm,
To my
yeah.
Point, money markets are liquid, right? So you're
Yeah.
not tying the money up, so you're gonna get a little
Yeah.
bit more interest on it.
Yep, I think it's worth looking into. Good suggestion, Mike. Charles, on that, I know you guys cover some IDAs and also at least 1 or 2 other land banks, right? Have you, and this is maybe a trick question because you might not know the answer, you might need to get back to Jess on it or something, but do those other entities like that you folks audit employ those strategies, like other land banks that you guys work with?
Nick can speak on it, but yes.
Thank you.
Yeah, I mean, we work with another entity. Again, they're in a position where they were holding significant grant money for a while, so they were able to invest. It might not be as easy here, but yeah, it's definitely something that other entities have looked into and explored to see if it makes sense.
Yep.
Buffalo and Niagara Land Bank, Ben Lake, has some investment that they report on. And as as an authority, when you do hold investments, you have a separate report that you have to file. It's not very material, it's not significant, but that's the only legal component as an authority, is just to report.
Thank you. That's helpful.
I thought the one that like basically came over. Involved, and that was what we had.
ARPA, yeah, that's what I
Like a
think Charles was
third,
referencing.
a third of it came over. First we requested 600, and I think I requested 640,000 or $630,000. So that came in, and then slowly kind of spent it down. And I have to make another request for some more dollars to come in. So yeah, but correct, yes. And that's how our CRI dollars worked too. We made a request and those funds came in advance
Tranches, right?
before we spent them. Whereas most HCR programs require that the dollars to be spent first and then.
Right, and this is the funds, I mean, that's the funds we're using, right, Jess, to pay in advance, or back a better way to say it,
Mhm.
then that gets reimbursed from the
Yes.
grants, right? So we are using those funds, some of those funds to pay for projects as we go, and then we get the reimbursements from the grants.
Yep.
Okay. So we would just want to have, I think Charles, we made this point, I think we would just want to have whatever realistic number that we don't think we would touch in some given period of time. $1 million, or, you know, I don't know what the number is. That's a number that I'm sure you can figure out with
Work with our
our
accounting firm.
financial people.
Yeah,
Yep.
our accounting firm to figure out what's an appropriate number.
Yep.
Okay.
Thanks for that.
So expenses, again, broken down, financials are broken down a little bit more specifically, but for purposes of highlighting the financial statements, you have cost of sales. Again, with 15 properties sold as opposed to 7, we expect to double a little bit more, and that's exactly what we're seeing. On the blue portion, your cost of sales went from 590,000 to 1.26. And then the administration part of it, a lot of it comes from professional fees, consulting services, preparing some of those sales to happen. And so those costs again and also some of the percentage that came, I believe you had a 0.5% admin agreement with the county, or I'm sorry, the city. So costs or administration costs went from just under $300,000 to $446,000. Again, as planned with the award of the ARPA funds. Then your net position, your bottom line, as you can see in 2024, the difference there is your change in revenues and expenses. So $1.3 million is how much net position grew during the year. And the change every year, the change in your net position, it directly relates to your change in the assets that you have available for sale. And so again, as you've done these significant projects throughout 2023 and 2024, yes, you sold some, but you have a lot left and a lot of work that's been done on them. As you sell those properties, obviously we'll see this net position go down. So it looks like a strong fiscal position as of 12/31/2024. It is a strong fiscal position, but it's going to go back down to those levels once all the ARPA awards are used and CDBG, and you sell those properties that you've done all the work on. So it's a good look for this year, but even 2022 and 2023 is still a good fiscal position. So you're in a good place. And again, I think that having those discussions on cash is a good thing. You do have the ability to potentially start thinking about this. But whether you do it or you don't, I believe you're still in a good fiscal position looking into the future. So there's a clean audit. Happy to answer any questions. I know we're going to do this again for the full board. But yeah, we have our information in the back. We're available throughout the year. If you have any questions, just feel free to call or to email.
Now, to review, budget and
Speak up a little bit. Hard to speak up a little bit so they can hear.
oh, okay.
Yep.
I don't think that we need any kind of motion to accept anything.
No, it just, like, is the finance committee in agreement with, advancing the financial statements as proposed to the board? I think that's it.
Yeah,
Yeah.
I think the full board will
Yep.
vote to accept it.
Vote to accept it.
Want to review the budget amendments first?
Yeah,
Okay.
sure. They're set. If we wanna, have them come back on for the board meeting, that'd be fine.
Thank you again, Charles and Nick. If you want to hop off and then you can join on the other one in just a few minutes if you'd like to. Thank you very much.
What time?
Get off your video.
3:30, so like 4
I'll
or 5
just go on.
minutes. Yep.
All right.
If you
Thank you.
guys want to kill your video for a couple
Yeah.
minutes too, you could do it that way, so you don't have to keep
I,
logging on.
we have 2 links though, but yeah.
Two different
So if you
links,
get,
okay.
but if you guys want to
Yep.
jump on the other link, once this is over, I'll get the other link on. Thank you.
Sounds good. Thank you.
I'll try to be really quick with these amendments. So on the first page here is the full budget. What we're allocating is an amendment to our Department of Homes and Community Renewal, Land Bank Initiative Phase 2 capital dollars. 252,000 and change is what we have remaining starting at January 1 and what we have to spend throughout 2025 to get that grant down to 0. After that, we're adding in a new grant funds line for homes and community renewal, vacant rental program funding for $460,000 to spend in 2025. As the board will recall, we have a professional services contract with IdeaCraft right now for $20,000 of VRP funds to market the program. So we're adjusting that as such. And our programs and dues for 2025, there's an item in today's board agenda to reflect that accordingly. Instead of $2,500, it's $2,000. So then that's all reflected accordingly in the operating budget. And in the capital budget, I just have those figures all broken down. One of the things on the capital budget, just to keep in mind, we did change I do need to make, I'm so sorry, I do need to make one adjustment to the acquisition amount under appropriated fund balance. I have $130,000, 511 under appropriated fund balance. That needs to move up under LBI phase 2. So that would be $160,511 as the amendment. Another question?
Question. Okay, now, I will entertain a motion to, accept the, audit and, amendments to recommend to the full board.
2 separate ones probably.
Yeah, that's what-
Kyle? A second. Okay, all those in favor? Pass, okay. Seeing no other.
Do the other, if you would, Mike, just do them as 2 separate ones. 2 separate motions, I think it both makes sense, right? For both those ones. So like that first one was to accepting the audit,
Okay,
and the second one for the budget amendments.
you're fine.
I'll make them.
Done.
Okay, and then adjourn.
And so no further business, I would entertain a motion to adjourn. Larry, second, aye, all those in favor, aye, we are adjourned.
Perfect timing.